Good evening, ladies and gentlemen. Welcome to this meeting of Audit and Governance. I apologise to those of you who've been here for quite a bit of today on another piece of business. It wasn't planned this way, but I'm afraid it's just turned out so. We'll do the very best we can with that. So moving to the agenda, the first item is apologies. Mr. Hanton.
Thank you, Chairman. I've had apologies from Councillor McCormack. Councillor Slade, Leader of Council, also sent her apologies, and Tanya Coulter.
Thank you very much. Could I ask you please to deal with items 2 through to 4 as well, please, Mr. Hanton?
I've had no notifications of any substitutes, and item 3 is to invite members to making declarations of interests in accordance with the flowchart which is attached on the front of the agenda.
I don't believe there are any declarations.
Thank you, Chairman. No declarations of interest. And then item 4 is to confirm the minutes, which also been circulated with the agenda. That's the meeting on the 23rd of January.
So, members, are you happy that I sign those minutes as a true and accurate record? Thank you very much indeed. I shall do so. Item 5, Mr. Hanton, public issues.
Thank you, Chairman. There's no public issues, no questions or statements received.
Thank you very much indeed. So that takes us on to the substantial item on the agenda. Just quick forewarning, there are a couple of items of business to deal with after item 6, which won't take very long at all, but they do need to be dealt with this evening. But that takes us to item 6, which is the purpose of the meeting this evening. Members of Audit and Governance will recall that going back to the middle of last year, I invited members to contribute any issues that they would like brought forward to Audit and Governance over and above the regular business of the meetings. And some of those have resulted in officer presentations, really to further and strengthen members' understanding of important issues around the Council, which are areas that Audit and Governance need to understand and also probably will be looking at in different ways in the future. So one of those was around the relationship between the Council's General Fund and the Housing Revenue Account. I appreciate that some members have been members of councils for a long time and probably know a great deal about those issues, but of course others perhaps don't. And it was important, I think, to get a uniformity across the piece, if at all possible, and also to have a paper which we will circulate after the meeting electronically, so that all members can have that as a point of reference should they need it. And it's something that we will look to update as time goes by, so that again we can refer back to it and that members of the Council can do likewise, because the distinction between the two funds is fundamental, is enshrined in law, and I think perhaps needs clarification in some areas, which I'm sure we'll get tonight. So Mr. Richins, Chief Financial Officer, very kindly agreed to take on making the presentation this evening. He tells me that it's in 4 parts, but they are seamless between the 4 parts, and would prefer to take questions as we go along if members have any. I think I've tried to make sure that we end up with something that is relatively high level, in other words, doesn't descend into too much detail and therefore leave some of us behind, so that we're all at the same level if we possibly can. And I think Mr. Richins has perhaps optimistically suggested that this part of the agenda will take an hour or so. So without further ado, over to you, Mr. Richins.
Thank you, Chair. Before I start, can I just check our Chief Exec, or my Chief Exec, is comfortable, because he seems to be sat on the naughty step with regards to the table he's on. Okay. Okay. So, yes, so this is a presentation on the relationship between the Housing Revenue Account and the General Fund. And as the Chair has said, I'd appreciate if we could take questions as we go through the presentation. Just to explain what you're looking at to start with, on the right, is a development within Bournemouth. It was 3 2-bedroom homes at Montgomery Avenue, West Howe, opened in November 2018, and they were designed to reduce energy consumption by up to 90%. On the left is a development at Gravel Hill or Derby Corner in Poole. It's one I'm particularly proud of. At the time, I led an affordable housing group designed to try and increase the supply of affordable housing within Poole, and we had some land around Montacute School that generally we just couldn't develop. But the opportunity came forward to the council to buy the police station next door, which we did. That enabled Montacute School to apply successfully to the Building Schools for Future programme to obtain £12 million to resite the school as part of a land swap, which was the first part of the comprehensive project. And then the second part is we're nearly there with the completion of 62 affordable 1 and 2 bedroom apartments to be built across 3 separate blocks. So a really successful comprehensive development on that site within Poole. The presentation itself, as the Chair said, is generally in 4 parts. I'm just going to start with an overview. I'm going to give you some background to the housing revenue account. I'm then going to look at the housing revenue account in detail and the 3 categories of costs. And then finally, I'm going to look at some associated issues between that HRA and general fund relationship. And the first thing I've sort of like established, it's actually in 5 parts, not 4. So hopefully all 5 will be seamless as part of that process. However, can I start with a word of caution in the sense that Trowers and Hamlin, who are a large legal firm that specialise in the housing revenue account, described it as incomprehensible and confusing. So my task tonight was try and make the housing revenue account and its relationship to general fund as straightforward as possible, but I think we need to accept that in some areas it does tend to stray into becoming incomprehensible and confusing, and therefore in a lot of cases has to be tested in law to actually define what is the right treatment of certain costs. However, to give you some assurance I have some understanding of the subject matter, one of my previous roles for Dorset, Poole, Bournemouth and BCP Council was in December 1996. I was given a role as a management accountant for housing, councils, direct works and direct service organisations, transport, leisure and cultural services. Quite a bit of an agenda, with regards to how wide that could potentially be. At that stage, when people spoke to me about the HRA, I thought they were talking about the Horse Racing Authority. But that probably shows more about me than my education. But as part of that role, we delivered a 30-year strategic business case, which was judged to be well above average and enabled the council to obtain £34 million and led to the creation of the Almo and Poole. So it was something from which we developed on from that process. So with regards to an overview is this diagram which shows the council's general fund, and as part of that general fund, the council's housing revenue account as a separate ring-fenced account, but within that general fund. When a lot of people talk about the HRA, they almost think about it's a separate account. And there are 2 accounts for the authority. One is the general fund, one is the HRA. That is not the case. The HRA is a separate ring-fenced account within that general fund.
Adam, can I ask a question?
You may.
So, this is the question that I was going to ask, and you've raised the issue straight away. Within the general fund, then, is there an overall balance sheet that will encompass the housing revenue account?
No, because when we sort of produce them, we tend to keep... Oh, yes, I think the general fund of that...
Overall,
Yes.
You will have one overall balance sheet for the whole council.
Yeah, and that includes HRA and general fund. Yeah.
Right, thank you.
Yeah. The general fund then records the income and expenditure associated with day-to-day activity of the council. be that adult social services, children's services, refuse collection, highways maintenance, libraries, the coroners or the mortuary service. The housing revenue account is a landlord account of the authority which records the income and expenditure associated with the 9,593 council homes that are held within that housing revenue account. Generally, there are 92,214 properties in Bournemouth. There are 69,666 properties in Poole. So combined, that's about 162,000 properties. So these 9,593 make up about 6% of those properties within Bournemouth and Poole. Previously, the DCLG allowed councils to retain up to 50 properties without requiring a HRA to be maintained. The indications from MHCLG are that local authorities that own 200 or more social dwellings are required to account for them in the housing revenue account. So there are some very key thresholds at which stage you then need to consider establishing a HRA. These property numbers that I've just given you exclude the Bournemouth Temporary Accommodation portfolio. The Bournemouth Temporary Accommodation portfolio is a portfolio of 101 properties that are owned within the General Fund, with 61 of them actually leased to Seascape Homes and Properties, and 40 of them, because they're HMOs, retained within the General Fund. And the council have established this arrangement because the council cannot grant assured short-hold tenancies. Discharging its homeless duties requires the council to obtain a 12-month assured short-hold tenancy. So Bournemouth, the company was established because a company can issue assured short-hold tenancies. So that's why we set up those arrangements for those companies, because we couldn't discharge our homelessness duties by purchasing those properties and keeping them in the general fund.
Can I just ask the lease charges? Because presumably there will be a charge to Seascape Homes.
Yep.
So,
Councillor Bartlett.
Sorry, Chair. Yeah. So the lease charges, will they be peppercorn?
No.
They won't. So it'll be commercial lease rates.
Yeah. So there are specific guidelines that we have to follow with regards to what those lease charge is between, if you like, the general fund and the company, and then the company then has to set a rent to recover that. That process. But they can at an only day set an assured short-hold tenancy, whereas the council could not as part of that.
I understood. I understand that. I'm just concerned about the tax implications of the lease charge and whether that's done on a commercial basis or an advantage in order to save on tax. Thank you.
It has to be because... Sorry. So generally that's the overview. Hopefully everybody's okay with that as a starter for 10 as we start to go into the key statistics. So the key statistics for the HRA is that we generate incur expenditure of £46 million is predicted for 2021. 3 million of that we then offset by income from charges for services and facilities, be that sheltered housing and lifeline charges, be that communal charges for heating, power, water, sewage, laundry, window cleaning. Including that 3 million is also scooter and guest bedroom charges as part of the process. But the main income source is council tenants' rents, which generates £43 million. The HRA has an annual capital programme for next year of £41 million. On the general fund of the side of the equation, you have net expenditure of £283 million. £66 million of that is generated in funding from our share of business rates, our £3 million of revenue support grant, which is the unfranked grant we get from government, our new homes bonus, our collection fund surplus, and our share of the Charter Trustees precept that has to flow through our account. We generate £217 million then in council tax income, and we have a capital investment programme of £106 million, some of which will actually relate to housing programmes, such as the one we just spoke about with regards to the Bournemouth Temporary Homes accommodation project. So that's the key statistics. If we then move on to the actual housing revenue account itself, in the sense that BCP Council can legally only have one HRA. Okay, so just like we got one general fund, we can only have one HRA. However, as a new council from the predecessor councils, we picked up a HRA from Poole and a HRA from Bournemouth. And what we agreed with MHCLG we could do was hold them as neighbourhood accounts, i.e. sub-accounts of that overall housing revenue account for BCP Council. And you can see the Poole neighbourhood is managed by an ELMO, be that Poole Housing Partnership, and the Bournemouth neighbourhood account is managed directly in-house by staff of BCP Council. For those who aren't aware, why we're not talking about Christchurch in this context, is that Christchurch sold all its stock to a housing association in the early 1990s, and at that stage it closed down its HRA, and it ceased to exist from that point onwards.
For example, if we built some council houses in Christchurch, would we have to have another Christchurch neighbourhood account within the HRA?
You could manage it however you so like. You could put it within the Bournemouth one, you could put it within the Poole one, you could create a separate one. It's really up to you as part of that process, because from the government's perspective, there is just one, and that's the BCP HRA. How we manage it within that is our decision as part of that process. What the government, in exploring this with us, were very clear about is some of the larger local authorities have different models for almost different estates within their area. So it's quite common for them to have sold some of their stock through an LSVT, for them to have an ALMO and to have in-house management all within their one HRA as part of that process. That is something with regards to the bigger authorities you come across, but not necessarily little ones, because it just tends to be just a single approach as part of that process. However, just to emphasise the point that it's just one HRA, we should be just filling in one return to government. But the reality is MHCLG haven't quite got their acting order, and they're still, at this moment in time, we're having to do quarterly returns for right to buy receipts on both the Poole and the Bournemouth neighbourhood accounts, and I keep pushing them very hard to create just one which we can fill in, because it does have some significant issues for us having to keep splitting it into two as part of that process. So that's the housing revenue account. With regards to the property numbers that we've got 5,112 within Bournemouth as at the 31st of March 2019. We have 4,508 within Poole as at the 31st of March 2019. Overall, about 9,600 properties. And you can see that the average rent is £85.90 in Bournemouth and £86.51 in Poole on a 52-week basis. Now the point there is that Poole actually charges rent on a 48-week basis. So it takes that annual amount, which is 86.51, times it by 52, divides it by 48, and that's what it charges on those weeks. You have 2 rent-free weeks at Christmas and 2 at the end of the year. Now Bournemouth charges it on 52 weeks of the year. Now clearly, as part of our process of creating consistency, we're going to have to challenge ourselves about whether or not we actually carry on with that arrangement or whether we adopt a single model going forward. In regards to 2021, on Tuesday night, all members agreed that the rent will increase by 2.7%, which is the September CPI plus 1%. And that model will need to be adopted and applied for the next 5 years, because that's in line with government social rent policies. Previously, the Welfare Reform and Work Bill 2015-16 imposed a 1% per annum reduction in rents charged to tenants for 4-year periods from 2016-17 to 2019-20. And that was, caused quite a lot of friction for local authorities because we had a 30-year business plan based on almost that CPI at September plus 1%. And then our friend George Osborne came along and at the last minute, without very much of an introduction to it or very much consultation, changed the policy overnight. Clearly it's part of the managing austerity agenda, but clearly not without implications for each individual local authority's housing revenue accounts. So with that, Mike, sorry.
Just a quick one on the totals that we've got there of housing. To what extent are the numbers under right to buy exceeding the build? In other words, have we got a decreasing stock or an increasing stock?
Can I come to right to buy later?
Yeah.
So, if we then move on to the HRA, the HRA is a ring-fenced account. It reflects, as I said, a statutory obligation to account separately for local authority housing provision as defined in law under Schedule 4 of the Local Government and Housing Act of 1989. The important points to emphasise is that it is a ring-fenced account. The credits and debits are prescribed by statute. There is generally no discretion to breach that ring fence. You cannot budget for a deficit in the HRA. All borrowing within the HRA has to be in line with the CIPFA Prudential Code, and there are 3 main categories of costs. It is, however, acknowledged that certain items of expenditure are borderline. Okay, and councils also have discretion to include or exclude certain items within that HRA subject to the Secretary of State approval. The examples of debits to the account as prescribed by statute are interest on loans, depreciation on dwellings, debt repayment costs, interest on notional cash balances, debt management costs, revenue charged to capital, transfers to the major repairs reserve, and impairment of dwellings. If a HRA asset is sold other than the right to buy under the right to buy rules, that generates a capital receipt, and we'll come on to later potentially what happens to that capital receipt and what options there are. But generally that sets out that statutory framework around the housing revenue account. So as I said in that, there are 3 main categories of costs within the HRA. The first are HRA core services. Simply, HRA core services are such, and there is no doubt they should be charged to the HRA, full stop. And you can see from the list that includes policy and management, concierge services, communal heating, lighting and cleaning charges, CCTV, neighbourhood wardens, play areas, community centres, grounds maintenance, estate management, voids management, rent collection, responsive maintenance, tenancy management and service charges. They should all be charged to the HRA, full stop. However, a general fund contribution must be made to reflect any general community share of those costs. And a good example of that would be grounds maintenance, where actually we have grounds maintenance within an area that used to be, say, a housing estate. That should be charged to the HRA, but actually, because we've had the right to buy, and therefore the general community potentially using those facilities now, then you have to make an adjustment and charge some of that to the general fund as part of that process. The recharges or the contribution from the general fund should be fair and proportionate.
When you say the right to buy, when you've got an estate and the right to... Right.
when you say you got an estate and there's been a right to buy, so some of the properties on the estate are not owned by the council, why does that have to go into the general fund? Why does that not get recharged to those that have bought the properties?
So this isn't their grounds maintenance of their own gardens. This is grounds maintenance of any, if you like, general communal areas that might be available for everybody to walk their dogs on within that estate, for example. And therefore, it's not charged to the individual homeowners, because actually, outside of the housing estate, grounds maintenance is part of your council tax charge. And therefore, it would be inappropriate and seen as unfair in those instances for grounds maintenance when you just happen to live in a property that was within an ex-housing estate, that you pay an extra charge for your grounds maintenance as part of that process, whereas if you were fortunate to live in an area that wasn't part of a housing estate, it would be picked up as part of your council tax. So it's part of that process.
Only that I have a flat in London, and I do pay towards the ground maintenance because it is a former council-owned property. So that's not always the case. It appears.
But I suppose it depends on what grounds maintenance you're actually paying for. So in London, are you paying grounds maintenance for grounds maintenance on Hyde Park, or are you paying for its more specific ground?
I mean, it's an interesting challenge. So if you're on a leasehold property, so you've got a flat in a leasehold property, then the freehold is retained by the council within the HRA. Therefore, the bit of land around it is defined as within the HRA. So yes, there you would be charged a service charge for that bit. I think the key question comes, though, because we don't... So if you lived on a private estate where the roads were private and the grounds were private and maintained by a management company of some sort, then there's room, if you exercise the right to buy, to say, well, it's part of a private estate. But most of our council estates aren't so clearly defined. So for a roadside property where you buy the freehold under the right to buy and it's the grass verge out the front, then you start this apportionment process. For a leasehold decision, if we had an enclosed estate, a gated community, then I think there might be a separate debate about it.
Yeah, I'm struggling with this too, because presumably the council housing, people are still paying council tax, and the people that own their own properties on the same estate also pay council tax. So they're both contributing essentially to the general fund in order to maintain the areas on those estates. Or are you saying that if you own a council tax, within the council house rent, there is a contribution to grounds maintenance, which is part of that housing revenue? Are they paying twice?
First of all, to emphasise, it's not huge sums of money we're talking about there, but I will also emphasise those words, incomprehensible and confusing. And I'll keep coming back to that because some of those areas you can spiral into trying to think, the rules are the rules, you apply the rules as part of that process. And the rules for HRA core services is they have to be charged to the HRA, but then you work out a fair apportionment from the general fund as part of that process. So just to emphasise, where you have calculated that fair and proportionate contribution, it has to be supported by a formula, and you have a duty under the Housing Act to regularly review that. And I think as we go into 21-22 financial year and the budget setting for that year, we will have to undertake probably a review of some of those recharges now that BCP has started to stabilise, if you got, as part of that process. It's probably also worth highlighting that Circular 895, issued by the Department of Environment some time ago, is a circular which is often referred to when you start talking about the HRA and General Fund. That said, that road sweeping and cleaning of the roads and snow clearance are services provided to the community at large. Therefore, they are not consistent with a local authority's housing function and are therefore outside of the HRA. So those services have to be charged to General Fund and cannot be charged to the HRA in any way, shape or form. The relationship on grounds maintenance was quite an interesting one in the sense that between 1988 and 1991, Poole HRA paid the General Fund £2.2 million to provide for future grounds maintenance on HRA land. At the time, the base rate was around about 11%, so that contribution lasted into 2006-2007 before it was fully used and the General Fund, the HRA had to start paying again. There was only one other local authority that I could find that did something similar, and that was Bournemouth. So it's quite interesting. It seemed to be quite a local arrangement that came back to in 1988. But clearly, the time has elapsed, and actually, we now have a position where both those accounts are paying relatively, contributions for grounds maintenance within their areas. So that's HRA Core Services Part 1. HRA Core Services Part 2 is that, again, these are services that should be charged to the HRA, but in this list, generally these costs are borne by the General Fund, and we then have to make an apportionment to the HRA. But it is very clear that they should be charged to the HRA. That is Council's leadership and Corporate Management Board. So the share of the senior management of BCP Council needs to be absorbed by those HRAs. Members' costs, including democratic support, the HRA needs to pick up some of that cost, because on Tuesday of night, members set that budget, and therefore it's appropriate that they bear a share of the costs of members as part of that process. Insurance costs, theft of the property needs to be charged to the HRA. So does a share of pension backfunding costs, bank charges, treasury management costs. Any costs that are incurred on behalf of the whole authority need to be split between the two, and we saw one of those on Tuesday night with regards to the change costs. And any legal, accountancy, procurement, estate, HR, payroll, IT costs, they need to be fair and proportionately apportioned between those two accounts. But so there, the first category of costs definitely should be charged to the HRA. No quibble about it, although there is clearly a process to working out how much.
You said fair and appropriate. And proportionate, sorry. How do you define fair and proportionate?
Professional judgment. Professional judgment.
I understand what that means.
It's a professional judgment as to, clearly when you go through that process, you're going to look for evidence bases, you're going to look for some kind of rationale to justify the split between the two. So the second category of costs is HRA Core Plus services. Now, I haven't given these names. These are names that are used throughout the relevant legislation and manuals. So they're not exactly ones that would roll off the tongue and you would be easy to engage with. So these are where there is a where there is a HRA, these are services you would expect to be charged to the HRA. However, such costs may also be incurred by non-HRA local authorities. These are also services which may attract external funding, such as the Supporting People grant funding, before it was removed under austerity. So you can see that these costs, these HRA Core Plus services are generally things like tenancy support, antisocial behaviour, housing-related support, be that alarm services, sheltered accommodation charges, warden charges, etc. Where the services are entirely charged to General Fund, it is appropriate for the HRA to contribute to these costs, and HRA Core Plus services might attract, as I said, some funding from external sources to supplement the overall cost of those services. So they're the HRA Core Plus services. That then leads me into the final category of costs, which are the non-core services, and you would expect these to be charged to the general fund. That would be street lighting, dog wardens, personal care services, homelessness administration, housing advisory service. Rather confusing amongst these sections, they also included the administration of a common housing register. However, they put a footnote to the legislation that said that these costs should be split between the HRA and the general fund, in which case I didn't know why it didn't appear on the previous slides. But, as I said, it's incomprehensible and confusing, and I'm not to reason why they put it into that category as part of that process. And again, just to emphasise, Circular 895, issued by the Department of Environment, clarified a long-standing debate as to whether dog warden services should be charged to the HRA and general fund, and it was very clear they considered it essentially to be a general fund service and therefore should be charged to the general fund. So those are the three categories of costs, what the general are as part of that process, and what we're going to have to do is continually challenge ourselves about the costs we incur as to how they fit with those categories and where they should be charged between the HRA and general fund. My chief exec has a question.
Well, it was just to make the point really that as this was being introduced, there was a lot of politics at play. So I think the first thing that stimulated this was the notion that some councils were charging very, very low council rents. And it was clear that they weren't getting charged the full cost of providing the housing. So that was a real push. And then they realised that there were other authorities that were charging more to the tenants and were really pushing it that way in order to keep the council tax down. So then they've gradually built it up layer upon layer. And I think that's why it's so complex. Because if you started from scratch, you might come out with this sort of conclusion, but you'd express it very differently. What they've done is I say, I think the starting point was the recognition that some councils were charging too little rent, but then it became a recognition that some were charging too much. And, as a councillor, when I've worked Birmingham Labour controlled, Westminster Conservative controlled when I was in housing, and just to say that for both of those, they had very different political perspectives. And one was trying to keep the council tax down, therefore they charged as much as possible to the HRA. And one was trying to keep the rents down, therefore they charged as much as possible to the general fund, as little as possible to the HRA. So you can often, it can sometimes be polarised into party politics, but actually they were just trying to get the right balance. But it's not expressed at all clearly, I don't think.
So what we'll then move on to is some of those areas where they hit that borderline category, or there are options with regards to how you potentially deal with them. The first of that is external debt. So this is where we have loans for the debt that we've incurred as a council, and they can either be charged to the HRA through taking one approach, one pool. So you take all your external debt charges, you add them all together, and then you apportion them between the two. Or you say that individual debt will go to the HRA, that individual debt will be associated with the general fund, so you take the two pool approach. BCP Council, as did Bournemouth and Poole, adopts a two pool approach. So we have some very specific debts in the HRA and some very specific debts in the general fund. As Audit and Committee and Governance Committee will know, as at the 31st of December 2019, BCP Council had £197 million of external debt. Of that £197 million, 64 million related to the general fund, 133 million related to the HRA. Of the 133 million HRA debt, £86 million was taken out on the same day. Okay, that day was the 28th of March 2012, because on that Friday, which was the 30th of March, Bournemouth and Poole both were required to make payments to the government to buy themselves out of the HRA subsidy system, and they had to do it a couple of days before because they needed clear funds in their account in order to be able to make those payments to government on that Friday, which was the 30th. On the 1st of April 2012 was the first time in a generation that local authority housing authorities were able to retain all the rental income it received in order to plan and provide services to current and future tenants. Up until that point, benefit paid in respect of HRA tenants, referred to as HRA rent rebates, was charged to the housing revenue account, which was a really bizarre situation where you had the rental income, and actually some of that rental income was then paid, giving benefit to some of those tenants as part of that process. But in order to clear that, so that actually all those HRA rent rebates now feature part of the general fund side of the equation, you had to pay yourselves out of that system. Bournemouth paid £43 million. Poole paid more. It paid £44 million. Now you might say, why did Poole pay more than Bournemouth when it's got a lower stock? But the reason was, when the government gave me that £34 million, they gave it to Poole as part of supported borrowing. So it was actually Poole were allowed to be in higher level of debt because of that ALMO position and the incentive that the government gave at that time. Hindsight's wonderful, because on that date we took out 2 fixed 50-year loans, because the government offered Bournemouth and Poole the lowest rate in government history with regards to those loans, which was 3.48%. The rate today is 2.74%. But at the time, it was the lowest rate in living history. But that shows you what's happened since 2012 as part of that process. So that's debt. Then we come on to some areas where actually there could be HRA, there could be general fund. Local authorities tend to deal with them slightly differently. We, as Bournemouth and Poole, have gone through a challenge process and come up with the assessment that they should be general fund costs. So the first of these are solar PV panels that are placed on council tenants' roofs. Poole has a stock of about 1,500, which is about a third of its stock, and I think Bournemouth's in a very similar position as part of that process. Originally, they were within the HRA, but we transferred them to the general fund some time ago because there was a lot of challenge around what was the purpose of these solar panels, and that was to reduce fuel poverty. And that fuel poverty didn't sit very well with the original legislation around the purpose of a HRA. There was also that aspect that only the general fund has the legal power to sell electricity. And technically you're letting the tenants benefit from that electricity for free. So based on the latest guidance, it was actually these should be in the general fund, and we transferred them into the general fund. The second area, which were previously in the HRA but we transferred into the general fund, were garages. And we did that based on some guidance around actually the determinant as to whether they should be HRA general fund is the principle on which they're let. If you can only get one of these garages if you are a HRA tenant, then they should be within the HRA. But if these garages are open to anybody to apply for, then they should be in the general fund. So we went through a process where we transferred a significant number of garages between the two. We kept some, however, in the HRA, and we kept those where the HRA identified that they were on development sites, that they wanted to develop an out. So yes, there was a garage, but in 2 years' time they want to knock it down because actually they wanted to develop that for further social housing, in which case those garages are retained within the HRA.
Isn't that making life very complicated? If you've got, a series of garages and some of them are privately let and some of them are HRA let, aren't you making the whole management of those garages very complicated?
I think you come down to the position that actually, the garages generate some significant income, and it's about where that income should best sit. But the reality is you have to follow that latest guidance around the letting principle, and therefore following that letting principle, applying it to our garages, it was deemed that that sits best within the general fund as part of that process. So that brings us on to land and property. So council-owned land has to be identified as either owned by the general fund or owned by the housing revenue account. It can, however, be reassigned between the two. We often refer to it as being appropriated between the two accounts. However, when you transfer that land between the two accounts, you have to adjust the capital financing requirement. Now, as we know through Audit and Governance Committee, when we've looked at the annual Treasury information, the CFR, as it's referred to, is the amount of unfinanced capital expenditure. Therefore, it is the indebtedness of each account. So it's the technical debt of both the HRA and the general fund has to be adjusted when you do a transfer between the HRA and the general fund. You have to reduce the account of the seller and debit the account of the purchaser by the certified market value of that land. In regards to dwellings, the Secretary of State approval is required if you are appropriating a dwelling out of the HRA to the general fund. If you're taking it from the general fund and put it in the HRA, you don't need his permission as part of that process. Transfers. So what you could do is you could transfer all the developable land from the general fund into the HRA. What that would do would reduce the debt in the general fund, and it would result in the general fund having to make lower annual debt servicing costs. That is something you could do if you so wanted to.
So what we're talking about is a transfer on the balance sheet, and there's no real cash involved.
Correct. There's no actual cash in charge. It's a book adjustment between the overall balance sheet, yeah.
So if the housing revenue account wanted to develop a site, for example, they wouldn't have to worry per se about the cost of about the purchase of the land, because they just transfer it to their balance sheet effectively, and you take the debit off of the general fund.
Well, they do have to worry about it, because actually those debt servicing costs in relation to the market value, which is adjusted between the two debt piles, if you like, they have to then pick that up going forward. So it becomes an additional annual cost because they've taken on more debt of the land that they've sort of purchased, if you like, through that process.
So would that debt then be internal borrowing as opposed to external borrowing?
That depends on the position in regards to borrowing, because you could be either. You could make a decision for it to be either as part of that process. That then brings me on to capital receipts. Now, up until this point, we've been talking about revenue. And that original graph, when it looked at the general fund and HRA, was all focused on revenue. When it comes to HRA, what many people don't really pick up on is there's no ring fence on capital receipts. Okay, so you can take a capital receipt from a HRA asset, and you can actually use that capital receipt to finance, some capital expenditure in the general fund. There is no ring fence on capital receipts. However, as I said, with land transfers, what you have to do is you actually have to do the adjustment to the capital finance requirement. So it becomes almost a virtual or notional transfer or appropriation has to account between the two. So again, the CFR, the amount of unfinanced capital expenditure, therefore the indebtedness of each account has to be adjusted. You have to reduce the HRA. If it was disposing of a HRA asset, you would have to increase the general fund. If the capital asset was going to be then used, receipt was going to be used for the general fund, and it has to be based on the certified market value of the asset. So it really has the same effect as if you had bought land by borrowing as part of that process. But it is important to know that ring fence does not apply to capital receipts as part of that process. So then that brings me on to dwelling sales and the right to buy. So, at this stage, I thought I'd give it a bit of a quiz. Okay, so there's a prize. I don't know what the prize is. I just made it up. As to the question I'll throw open is, what year was Right to Buy introduced? Okay, and I'm going to give you some clues. Okay. 83. Okay, the first clue is Rishi Sunak, the Conservative Chancellor of the Exchequer, was born in this year. Okay. One of my favourite TV programmes, Yes, Prime Minister, was first broadcast. Okay. Peter Sellers and John Lennon both passed away in this year. Okay, here you go. Okay, it was a year in which inflation was running at 17.99%. Okay, the base rate was 17% at the start of the year and 14% at the end of the year. And it was the year that Liverpool won their 12th league title. I would have got that one from that one. So the answer is, for those who haven't already guessed, it was 1980. Okay. Right to Buy was introduced on the 3rd of October 1980. And it gave council tenants of 3 years standing at that time in England and Wales the right to buy their home from their local authority at a discount. So, as I said, introduced in 1980, it gives a maximum discount of 82,800 deducted from the full market price. Generally, the tenant needs to have been a tenant for at least 5 years to qualify for any discount of any value. The discount is linked to length of the tenancy. The maximum discount you can get is 70% of the full market price. And if you dispose of the property within 5 years, then you have to repay part of that discount. With regards to the receipt that you generate after that process and after the discount, there are 5 deductions that the council is allowed to make. One is for transaction costs, so just normal disposal costs, and that's £1,300 per property. We then have to deduct what is referred to as allowable debt. This is a very complicated formula based on the 2012 self-financing position of that stock at that time. You then have a local authority share and a government share. The government share, the council, through what is known as the Right to Buy retention agreement, sometimes referred to as a one-for-one agreement, retains that government share, but we have 4 years in which to then spend it on affordable housing, and there is a maximum that we can then put into those affordable housing schemes. It can only be up to about 30% of that overall cost. If we don't, then we have to pay it back to the government with interest at around about 4%. So there's a real incentive on us to use it as part of that process. So that brings me on to my second quiz question, okay, which is, what percentage of the HRA stock have we sold since 1980? And I'm going to use Paul as the example. So what percentage do you think of our HRA stock that we had in 1980 have we actually disposed of under the Right to Buy process?
No clues.
Any other suggestions?
25?
25.
Okay. I think David must have been looking at my slides, because it's 40.3%.
And I got 1980 as well.
Yeah. The thing is, when you recognise that a significant proportion of that stock is sheltered accommodation which cannot be sold under the Right to Buy process, then that means that there is a significant value or amount of that original stock that related to family homes that's actually been disposed of through those years since 1980.
The next question then So the next question then is how much of it was replaced by affordable housing or social housing?
Not 40.3%. And you might want to know what you're looking at as part of this. This is the view from Nile Court, referred to as Britain's best council houses. It's 46 flats in 9 stories. It was identified via the Poor Affordable Housing Group that we had the opportunity to build on what was previously a highways verge. The thing to highlight is it's not actually council houses, because we actually developed it in partnership with Sovereign Housing Association in order to try and lever in that external funding and to develop at pace as part of that programme. But clearly it is deemed to be the best view from a council house in England as part of that process. So hopefully that fills the brief in identifying what the relationship between HRA and general funds is. Hopefully everybody takes away the view that it's incomprehensible and confusing. But within that, hopefully you have a better understanding as to what some of those parameters actually are.
Thank you very much indeed, Mr. Richards. You told me an hour, and you've undercut that by about 2 minutes. So really interesting, really helpful. I would recommend this to all members of the council personally, and I hope we can give some wider publicity to the slides when they come out. And I think you are quite keen to update those slides so that periodically all members of the council can actually see with clarity the current situation on the HRA and the General Fund. Just before we move on though, are there any other questions from members? I think the interactive parts work very well actually.
Just one quick question about, you mentioned at the end there about sheltered accommodation cannot be sold under right to buy, but it might be more a question for a housing person about how does it qualify for being sheltered accommodation? Because certainly I know a close in my ward that when a lot of people look at it, they think it's council housing, it's sheltered accommodation, but it's sort of, there's sort of support there, but it's not classed as sheltered accommodation. So I visited somebody recently and he just bought one on the market, and I thought, oh, that's odd. But does it have to have certain criteria to be classed as sheltered accommodation? Like, I'm guessing a manager who's tenant on the site or something like that.
Yeah, I'd have to do some research to find out what the precise criteria are for determining something to be sheltered housing and therefore not available to be sold under that right to buy process.
Yes, well, right to buy receipts. Presumably, you have to use those receipts within the housing revenue account. And do you have to use them for replacing the housing, or can you use them for other things? And the other one is, do you know, have we got a big bucket of money available for to build some more affordable housing from those receipts?
The thing to identify is that we are allowed to keep the government share, as I said, but that comes with the expectation is that we use that within 4 years, as I remember it, on delivering additional affordable housing units, with the restriction that whatever we put into that can't be no more than 30% of the overall scheme value as part of that process. So there is a sum of money that both the Poole team and the Bournemouth team respectively are monitoring, and the government are monitoring, because they're looking forward, if we fail, to interest at 4% coming back their way as part of that process. So it is monitored, and that's where the important thing for me is that we have one BCP HRA, because what that means that if, for example, Poole, there was a problem on a scheme that you thought was going to use these receipts, The worst thing in the world is we give that back to government plus interest. However, if you've got a Bournemouth programme, which you can then apply that to, within one HRA, you can legitimately do that. And therefore it becomes much easier to manage rather than within those two silos as part of that process. So that's that element of it. What we're doing as part of the consistency work stream is looking back at things like the local authority share and the allowable debt to ensure we've got consistency in how they are used and applied. Normally the allowable debt should be about reducing the debt associated with the property that you just sold, that you took on from the government in 2012 when you had to buy all your own property back from government as part of that 2012 self-financing system. So we are challenging ourselves around that consistency and the application of those other elements of those deductible amounts from right to buy.
If sort of the thought behind that question is how do we build more council houses, or how do we build more affordable homes, or homes for the council to manage because we think we're a better landlord than the private sector, then I think the answer that you then look at new borrowing, and you look at borrowing either in the general fund if you're providing market rent homes, or you look to the HRA borrowing, because the borrowing cap has now been removed by government. So when you look at stories of other councils that have, say they're building masses of council housing or numbers of council housing, they're generally doing that not from the right to buy receipts or from us, they're doing it through new borrowing. So then it's all about whether the business case adds up. And the real problem with the business case is that to keep the rents at social rent levels, there's not many sites on which it's affordable to do that development. Or you have to borrow, you have to work your borrowing out over a much longer period than you would normally use. So I think if the thought behind it is that, then, and that's what we're looking at the moment. We're looking at, so how could we increase the numbers because the borrowing cap's gone? And that's where, the Almos were generally set up at the beginning because they had access to capital that councils couldn't access. Now the borrowing cap has gone. You start looking at the overheads of the Almo versus the advantage, and there's no particular advantage anymore. So that's where we need to look at, so should the council be borrowing to build council housing or affordable homes or market rent? Where do we sit in that?
You highlighted, obviously, Poole does it historically their way. Bournemouth has done it historically their way, in-house in Bournemouth. Obviously, Christchurch, different way. In terms of moving forward to the future, is there any suggestion or recommendation from the officers that there should be one common way for the Bournemouth and Poole bit, and does the Poole one run it more economically in lower overheads? Is there any intention, perhaps when the contract comes up for renewal, to look at it? Is the idea to carry on as we are indefinitely?
I think the first thing to emphasise from my perspective is that we're going through and trying to ensure there is consistency in accounting treatment between those two accounts, with regards to how they deal with all those items, making sure there's absolute consistency throughout those two accounts. So that might mean in the Bournemouth environment we change a bit, in the Poole environment we change a bit, because I don't think either you would say, well, it should be that one or that one. You'd probably say, actually, take the best of both. It should be something in the middle as part of that process. With regards to whether or not, you potentially look at, the Almo or in-house or another option going forward, then that's something for the council to go through, I think, due process on, to consider in the future. But at this moment in time, I don't think there's anything to say tomorrow we'll go all in-house or tomorrow we'll go all towards the Almo. I don't think there's any of that at this stage. But I think it is something we all recognise at some stage we're going to have to go through a process of evaluation to establish, which model we want to adopt going forward. Clearly, as I said before, we can carry on with the two because some local authorities have more than two types of management arrangements within their stock, so we could continue if we so decide. But it's something we need to challenge ourselves around, because is that the best value, if you like, for each of those tenant groups or within the tenant groups of BCP as a whole?
Up on that, you said that obviously there was no restriction for council housing to be built in Christchurch. Therefore, obviously, the disappearance of the boundaries between Bournemouth and Poole means that those two organisations can drift over one another's boundaries in the future, I suppose.
Absolutely. Yeah, from the governance perspective, there's one BCP HRA, you know, and therefore it is just our local decision as to how we want to manage that. You know, actually, you know, if we wanted to develop social housing again within the Christchurch boundaries, then that's quite permissible. You know, we don't have to apply to Secretary of State to do that because it's within our boundaries. We just need to decide how we're managing it.
I think we're all done on questions. So our thanks again, Mr. Richards, for the preparation and presentation this evening. Really appreciated. And I'm sure we've all, however much knowledge we came into this with, we've all learnt something out of this evening. Now, I said at the beginning of the meeting I had two other very brief items, which I'll just deal with now. The first one concerns our Audit and Governance Forward Plan, and our meeting on the 12th of March at 6 o'clock. And I think Mr. Hampton will be putting a note out about this, but we've got a presentation. But before the presentation, we've got three other items that will be coming forward. We need to deal with these items in any case. And since our following meeting isn't until the 30th of April, we thought we'd try and bring them forward to the meeting on the 12th of March. So first of all is the independent investigation and response into the Kinston Community Centre. That will be coming forward then, which will be Kelly Ansell and the Chief Executive. And then we have some work just to go through on a couple of items which I think we're all aware of, which is the whistleblowing, counter fraud and corruption, etc. issues, and also the financial regulations annual evolution. And those will both be updates from officers. And I think, as I say, we were already expecting them to come forward. Seems appropriate to try and deal with those rather than what will be quite a heavy agenda on the 30th of April. And then, of course, we have our presentation on sustainable procurement, which is something which, like this evening's, has been an item which members have asked to come forward. The one this evening was a couple of members and myself wanted to do this on the HRA. I can't remember who it was on the sustainable procurement, but it seems a perfectly legitimate subject for Audit and Governance to be getting a presentation on, and we'll deal with that one probably about the same length as the one this evening. So it isn't to try and burden the agenda too much. We want to be able to absorb really some profit from learning, and I think that's probably the best way to do it. So note will be going out when, Mr. Hampton? In the next day or two?
Yes, probably by the beginning of next week.
Excellent.
Yep.
Excellent. Jolly good. Thank you very much. All happy with that? Okay. And the other item concerns the email that I put out to members of Audit and Governance on the 17th, which must have been on Monday, which was, I suppose, twofold. One was to ask members, as I have done before, for any examples of items or issues relevant to audit and governance that we might be able to feed into the future. They might not be just presentations, they might be done in some other way, but I think generally that's been quite successful so far, but there's no doubt a whole range of other things which we could profit from. So want to do that. And the other part of that email was talking about something that came forward originally. I think it was from Councillor Bartlett, which was around an assessment of our work and performance as Audit and Governance. And as you know, again from that email, I recently went to an Audit and Governance training session set up by the LGA, and I hope to be able to extend that to more than just myself. It'd be good if more of us can go to those sort of events, and I'm working on trying to do that. But one of the things that came out as best practice from a number of authorities, and indeed from those who were running the course, was the opportunity for the self-assessment by using the CIPFA guidance which exists to help us to conduct our work more effectively. Now, what I think we could do is, because that's available anyway, my suggestion is that we try that, because we might as well. Self-assessment does seem to have been best practice elsewhere, and then we can look at it and see, is that exactly what we wanted, or did we want something slightly different? I think at least we need to be doing something. Be helpful if we can just pull it off the shelf, because that will be the most economic way of doing it, and it'll also be the quickest way of doing it. But I do agree with the original suggestion. I can't actually remember, was it you, Councillor Bartlett, or was it Councillor Cox? It was you. So I've wanted to bring that forward. So with your agreement, I'm going to ask officers to look at what SIPFA can provide for us and how we can go about it, and more importantly perhaps when we can slot it into our work programme. And then something that we haven't done before, we certainly hadn't done it in Bournemouth. I don't know whether Poole had or not, but I kind of doubt any of us had. And it would be good to just get on with it. And then we can judge whether or not we are properly fit for purpose in the function we're performing, and see whether that measures against best practice elsewhere in the country. And I suppose the other thing that I could offer to officers would be that link with those professionals in audit who were running the course on behalf of the LGA. It was only a couple of weeks ago, so it's all very fresh. So again, with your permission, shall we take that forward, see how it goes, see whether that satisfies all of us, and if not, what the alternatives are. Happy with that? Excellent. Jolly good. I didn't have anything else. There isn't any other business on the agenda. I'm not aware of anything else pressing, but could I just emphasise, please come back to me in response to that email with your ideas. Don't feel obliged to just come up with something. I mean, if it's something you want to spend more time thinking about, that's just fine too, because you will know that our work programme is fairly full anyway, so we won't be able to deal with them immediately. Excellent. Well, thank you all very much indeed for attending this evening, officers as well as members, and I'll formally close the meeting at 12 minutes past 7. Thank you very much.